Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, the lumberjack. How you doing, buddy?
I'm super excited to be here. Segment one was a lot of fun. Let's do number two.
Yeah, dude, the housing crash is happening, down 11.8% in a month. I would call that the start of the crash.
Yeah.
It may not be where these other channels are telling you, but it's exactly where I told you it would be.
Can't get a crash in price without a crash in transactions first. So
there you go. So I actually want to switch this one up because you and I lived through an environment that I think a lot of other financial channels need to go back and research. So something I did over the last 48 hours is I spent a lot of time on other financial channels, right? I usually do real estate channels, but this one I went to financial. So I saw, the Graham Stephan and VIP Financial and all channels really I hadn't seen before, but they're much bigger channels because I was trying to figure out, can I get better? And yeah, there were absolutely things I could do better, no doubt. But I'm not going to edit videos, so not happening. But one of the things I was left with is these individuals, younger guys, all of them, were really, they were pushing Kathy Wood stocks because they got them right. They were all seemed to be pushing Tesla.
Yeah.
An amazing company, but one stock out of lots of them.
Sure.
And they all seem to be buying the dip because the bottom is in and we're down 25 or 28% in the, the index. And I'm like, are you kidding me? I invested in an environment where the NASDAQ went down 78%. Yeah. We're not talking about Peloton being down 82%. Yeah. We're talking about the NASDAQ being down 78%. So feeling like you want to buy the dip again in dollar cost average it's okay if you make 100 grand on YouTube. But if you're trying to tell your fans who don't make 100 grand on YouTube that's what they should be doing, and that's all they should be doing, it just left a bad taste in my mouth. So again, we saw a crash. We lived through it. It took years. Lots of companies didn't make it. So why don't we talk about what we experienced, what we did, what we saw, because these young men, obviously we're too young. Many of them were under 10 years old when the .com crash happened.
Yeah. So I think pain is experiential, and that is, you and I woke up and watched our portfolios go poof in the night. We watched them during the day when you'd have a day's worth of meetings and you checked before you went into your meetings. At the end of the day, you realize, well, I just worked the next three weeks for free. And that's really that pain is experiential. And I think that's the biggest challenge that I have with, some of these YouTubers that are only in their late 20s or early 30s, especially whether it's like real estate agents, mortgage brokers, stock people, name it all, crypto. If it's in the last 10 years, you have no idea what a down market looks like. And you know what? This is where the wheat separates from the chaff. This is where the studs show. This is where the rock stars come out, because they'll be buying your portfolio for pennies on the dollar.
Yeah.
And there's a lot of like those meme stocks that aren't going to work through this. They just aren't. And so I think at the end of the day, it's great. You've had your time. That's awesome. Hopefully, it's not saying just because you're young, you're stupid. That's not saying that at all.
No, not at all.
I was a young guy all the way up through my entire career. For 15 years in tech, I was under 40, or 18 years in tech, I was under 40. So I was considered a young guy, 18 years in tech. Now, that said, I also would love to listen to the battle stories, mid 80s, early 90s, .com boom. It was kind of like Jordan Belfort when the first day he had his license was Black Monday.
Oh, wow. I didn't know that.
The first day he had his license where he could actually make his own calls and trade on his own behalf and trade on behalf of customers was Black Monday. Should have been a decent foretelling sign. That said, within 2 years of my getting into tech was the .com bubble. And Mike, you remember you were selling in those days.
Yeah.
Y2K. Y2K.
I remember
the 4-digit date code versus the 2-digit date code.
Yep.
And the crazy thing about it is the billions, the trillions of dollars that were spent, and what sort of an event did we have? And you can't say that we didn't have an event because all that money was spent. There were still a ton of other systems out there that didn't have what was needed, and they were able to still upgrade them over time. So my point in that is, you never really know the depth and breadth that something like this is going to go. But for the guys who haven't lived it, here's what I would tell you. If you want a dollar cost average, I'm not a stock guy. I was 20 years ago. If you want a dollar cost average, I would not be saying, I'm going to take all my dry powder and put it all in now on the dip.
Yeah.
It's a bear market. It's going to come back a little, dip more, come back more, dip more, right? I mean, this is what we're kind of expecting.
Yeah, it's a bottoming. The things that I remember, again, I was these young men 20 some odd years ago. I will only point at myself, but when I watched these hours of material, it was very clear they're doing the same thing. One, I was far too concentrated. Back in the time, I was investing in internet stocks. I mean, that was the thing, right? So from Cisco Systems to Excite, just lots of companies. Yahoo that went to many companies that went to zero. Yeah. I forget the numbers. I'll be close. It was like 1,200 companies went public in 1 year, and like 55% of them were bust in 18 months. It was
pets.com.
Yeah. Pets.com, all that stuff. Webvan. Remember Webvan? Oh my God. Yeah. Oh, geez. Yeah. So again, I was too concentrated. I think a lot of these guys that I watched in the last 2 days are way too concentrated. NASDAQ is not the only place today. NASDAQ growth is not the only place. Lots of other stocks. You have to realize these guys remind me of Peter Schiff. Agreed. Peter Schiff has been screaming gold, gold, gold for 3 decades. Sure. He's been right twice.
Sure.
3 times. Yep. And the reason I just got uneasy is what, Palantir, Tesla, Trade Desk. I mean, just over, Teladoc over and over. I'm like, God, man, why don't you guys talk about, I don't know, a financial stock, JP Morgan or, a grocery store or healthcare or something else, right? The market is much bigger than that area. When the market goes against you, your job's not to fight it and just wait it out. You're causing your followers a lot of pain. So I was so again, looking at myself in the mirror, I was far too concentrated. I thought also I had to be fully invested. I was a young guy, right? I was in my 20s. I'm like, I got 40 years till I retire. So put it all on black. Put it all on black.
If you just put 28.8, the market
Tony
for
Robbins.
8 years, by the time you're 65, you have not 1.8 million.
Yeah, not 1.8.
But the interesting thing, so to that end, Mike, I was talking to a VC guy last week, and said to him, he's like, one of the things that we're seeing in the transactions that we're looking at, and everyone's re-looking at transactions, is the multiple.
Yeah,
right, because it's multiple earnings. And so I said, because this guy 25, 30 years, 30 years, I think he's been in it. I said to him, so I wasn't in that part of the game in 20 years ago in the .com bomb. Mm-hmm. And I said, so what did you see? What happened then? And he said, a number of them went bust. Yeah. He said, but there were a ton of them that got acquired at 1.5 times earnings.
Exactly.
Even 2. And he's like, Matt, in the last few years, stuff had been getting acquired at 10x, 20x earnings.
Yeah. Well, some of them were revenue, right?
Yeah.
Revenue and earnings are very different numbers.
True. Yes, exactly. Yeah, exactly. Some were this massive multiple of revenue, and you're just like, what are you doing?
Yeah. So again, cocaine and Red Bull is the All In podcast quoted. The last 2 years, stupidity was done. Yeah, it's, again, right, having looked at this for a long time, having acknowledged my mistakes, what we've already seen is multiple compression. Roughly speaking, the S&P went from 26.6 now to 18. But here's the deal. I've been warning people for the last 2 weeks that we have started pre-announcement season. I actually warned the day before Snap pre-announced. And now we've had Snap, and just this morning we had Target. There are more coming.
Oh, yeah.
So now we have a multiple compression into an earnings compression. Guess what that math looks like? More pain ahead. Stop with the market is bigger than NASDAQ high growth. Being arrogant enough to think that what worked the last 2 years probably doesn't work the next 2 years is the other thing. I just kept pushing in on the same thing. Too concentrated, didn't learn my lesson. And yeah, these young men made me very nervous.
Yeah. I mean, I think the other thing too is that, think about it this way. China now compared to 02 or 01 crypto now compared to '01.
Oh yeah.
You know, Russell 2000, the trading platforms that everyone has access to everything.
Mhm.
I mean, there's a lot more to invest in, a lot more. But yeah, I'm concerned because I think people think that woodshed is 20%.
Yeah, exactly.
Yeah,
No,
it's not.
no. And again, so the bottoming process or whatever all these people want to call a bottom, like it happens that like we've been in this for what, 6 months? The NASDAQ 78% crash was years in the making.
It was
And we were on the bottom for a while. It's
for a while.
people expect again, I don't blame them, right? March of 20,
Yeah.
the market crashes. The Fed comes out of nowhere, bails everybody out. We're sending money to everybody like it's free. It bounces back. Why wouldn't they keep buying the dip? The worst thing to do would have been to sell the bottom. So I get it, but this is not 2020.
Yeah. Yeah. I mean, I'm concerned. I mean, I'm concerned that, you know, like we talked about in our video last week, we made a lot of effort to have a lot of dry powder.
Yeah, we've been talking about it for 9 months.
And it's to position ourselves to buy because we believe that the market's going to get hurt a little bit.
Not a little bit, a lot. I probably will have a decent portfolio in 12 months.
I was going to say, you're going to start buying stocks again, aren't you?
I am. Yeah, I've actually moved money over to an account. I have my shopping list and I have rough price points. And yeah, I will own some stocks. I will have, I don't know, probably 5 to 10% of my net worth in stocks probably within the next 12 to 18 months. And I haven't been there in forever.
Yeah, I have not been there since the incident of Cisco.
Yes.
Yeah. So I haven't been there since then. But in all honesty, I mean, we've engaged someone, and that's what we're going to be looking at. We're going to be looking at, you know, the market, because my money likes to find multiple opportunities that have multiples on them.
Yeah. I was concentrated forever. I did my thing. Now I'm to the point where I can be Charlie Munger and diversify. I got really good at one thing. Now I'll diversify. Not in the beginning. So
exactly.
Do me a favor. Where can people find you?
Lumberjack Landlord on YouTube, Lumberjack Landlord on Instagram, and my live streams 11:30 a.m. Sundays Eastern time.
And folks, if you haven't listened to video number 1, listen to video number 1 for an amazing start. We have some great news on Friday. Go check it out. Thanks.
Yes.